Well, one of the stocks of the moment is JSW Energy. Just look at the way it's got energy this afternoon. Had to say that one. 12% higher. Volumes are also looking pretty good. And as we told you earlier, JSW Neo Energy has entered into an MOU with the Maharashtra government for a hydropower project. And they're going to set up a 960 megawatt capacity hydro pumped storage project. So, of course, it means more revenues for them. And that stock is just zooming away. But on the flip side, Godrej Consumers has been sliding after reporting its Q2 business. Mangalam, what went wrong?
Well, a couple of things that went wrong. The first one, that people aren't buying enough soaps this time around in India. And secondly, they have seen a higher than mid-teen sort of decline in their EBITDA. On an overall basis, the company's seen a higher than mid-single-digit sales at a consolidated level. Mid-teen decline in EBITDA due to high cost of inventory and upfront marketing investments. That's something that a lot of the FMCG companies will have this time around because they've been sitting on high cost inventory and they are looking to ramp up their marketing spends ahead of the festive season and the second half as well. In India, high single digits sales growth happening in their business with a mid-single-digit volume drop. I take my point back on whether people are buying soaps or not. They are perhaps buying more soaps, but they are not buying our household insecticides. Because
as long as they're having baths every day,
they will be having
fine.
baths, I'm sure. But household insecticides are the ones that they are not buying. Home care is the business which has not done well in India this time around. Indonesia has been a problem for them for the last few quarters. So early double-digit constant currency sales decline out there as well. The only shining part of their overall portfolio for the last few quarters has been their Africa business, which will continue to grow in low teens. So double-digit growth coming in for that business for 9 consecutive quarters. What this means for the entire industry, however, is that it continued to remain soft during the quarter. Rural markets witnessed slower growth compared to urban, and they expect consumption to improve only in the second half of this year. As much as a lot of these analysts have been talking about as well, all the recovery hopes have been pushed to the second half. So until then, we have to contend with the second quarter. And as a result of which, we're seeing an impact on all the other FMCG stocks as well. Case in point, something like an HUL, which is currently at the low point. Watching out for Dabur as well, which will report its quarterly update in a day or two. So that stock too under a tad bit of pressure.
Okay, well, thanks for that. But let's move on.